Hello everyone, I am Pritha Roy from the Department of Finance at the University of Rajshahi. Today I will be presenting an overview of the latest monetary policy announced by Bangladesh Bank for the first half of fiscal year 2025 to 2026. This presentation is all about understanding the monetary policy. We will look at its goals, the tools used, and the reforms suggested. The main focus is on controlling inflation, supporting growth, keeping the exchange rate stable, and improving the financial sector. Here we will see the summary of monetary policy statement. The latest monetary policy statement was declared by the Bangladesh Bank on 31st July 2025. It covers the first half of fiscal year 2025 to 2026 from July to December. This policy primarily adopts a tight or contractionary monetary stance, reflecting the central bank's commitments to controlling inflation and ensuring macroeconomic stability amid ongoing economic pressures. Key highlights include maintaining the policy repo rate at 10%, keeping the standing lending facility rate at 11.50% and setting the standing deposit facility being revised downward to 7.2% from 9.8% the previous period. The main focus of this policy is to keep inflation under control, of which slightly improved to 8.48% to in the June 2025, remains above the central bank's target threshold of 7%. The Bangladesh Bank emphasized that this tight stance will continue until inflation stabilizes below the set target. The central bank has also prioritized rebuilding foreign exchange reserves, stabilizing the exchange rates of the taka, and advancing reforms in the banking governance and supervision. Here we will see the key objectives and targets of monetary policy. The goal is to reduce inflation and at the same time the policy supports 5.5% GDP growth by maintaining credit inflation. Foreign exchange rate stability. Bangladesh Bank will use market-based methods and try to rebuild reserves to 31.72 billion Markin dollar. Monetary policy used many types of tools. Here we will see the tools that monetary policy used. To manage inflation and liquidity, the policy used the interest rate corridor framework. It also used the standing lending facility. It sets the upper borrowing limit at 11.50 and the standing deposit facility at 8%. Bank also have to maintain certain reserves like the cash reserve ratio and statutory liquidity ratio to keep the system stable. It Bangladesh Bank also used open market operations like repo rate to manage extra liquidity. Liquidity support tools like KLS and ELS helps bank during short-term shortage. Refinance facilities are available for priority sector like agriculture and green finance. For Islamic banking, special tools like MLS and IBLF are used to manage liquidity according to Sharia rules. Now you will see significant changes compared to the previous policy. Compared to the last monetary policy for the first half of fiscal year 2024 to 2025, several significant changes and adjustments are observed. The policy rate has been kept unchanged at 10%, indicating a continuous of the previously stance rather than further tightening or losing. Standing facility rate at 11.50%, the previous and upper limit for banks to borrowing the central bank during liquidity shortage. Standing deposit facility set at 8%, offering a floor rate for banks to deposit excess funds with the central bank. The most notable change is the reductions in the private sector credit code target from 9.8% to 7.2%, reflecting a more conservative approach to limit excess liquidity and curb inflationary pressures. Focus on inflation. Uh, which aimed for gradual inflation reductions. The policy explicitly sets the conditions that interest rates uh, re- will be only be reconsidered when inflation falls below 7%. Now we will see suggested policy reforms. About my understanding, Bangladesh Bank is working on better transparency with more press briefing and dedicated portal to deal with non-performing loans. Stricter rules and help the judiciary are needed. The policy also sets long-term inflation targets to guide expectation and build trust. In conclusion, we say that the monetary policy is restrictive but necessary to restore stability. Its successful depends on deeper reforms and coordination with fiscal policies. Only then Bangladesh achieves sustainable and inclusive growth. That's all about my presentation. Thank you all for listening to me.